Hello and welcome to Big Deal. I'm Nisha Poddar. Now, one sector which has been and continues to be the most active one in mergers and acquisitions is the cement sector. Now, Adani's entry in the cement sector with the mammoth acquisition of Ambuja and ACC is a big disruption in this space and will continue to fuel the deal space as more consolidation really picks up. So the big boys, Birla with largest cement player Ultratech, Adani with aspirations to become number one, and JSW Group's ambitions in the similar space is likely to really create immense M&A action. So let's deep dive on what's in store in this cement landscape in the country as it gears up for a complete overhaul in the next few years to come. Let me welcome on Big Deal today Jigar Mistry Anil Singhvi and Mangesh Bhadang. All of them have tracked and have been part of the cement sector very, very closely. Gentlemen, welcome to CNBC-TV18. Anil Singhvi, given that you have led cement companies in the past, you're still associated with this particular sector, and you keep a close watch on this. What's your perspective on the big disruption with the entry of Adani that this sector has seen, and how much M&A activity are we expecting also in this space?
Thanks, Nisha. Thanks for your kind words. My first take is that I think the industry looked very lackluster, really not having many deals and all that. And I think with the entry of Mr. Adani, the whole landscape is going to change and change in a big way. I'm recollecting my own days of Ambuja, and I think we were like one of the very fast movers in the industry, looked at consolidation way back in late 90s and early 2000. And I think they're going to repeat similar kind of trend now for next 3 or 5 years. So to me, I think this one change of ownership from wholesale to Adani is a big titanic shift which is going to be there in the cement industry. So I think my take is that we will have a far bigger consolidation. Hitherto, the growth was largely on account of cement companies growing organically. I think it's going to be now game of M&A.
That's right, game of M&A. But Anil Singhvi, you'll agree with me that in the past also, whenever a big asset has come in, very recently Ambuja, ACC, there have been big players who have really fought neck and neck to really get that asset. And that was a repeat of the Lafarge transaction that we had seen a few years back where Nirma finally bought it, but all the big boys were involved in that particular bid process as well. So any time, whenever cement assets are up for sale, there has been huge amount of action, and especially from big business houses. Now, Jigar, you've been tracking this space for a very long time. What are the pros and cons of the kind of consolidation that we are gearing up for in the cement sector?
Good afternoon, Nisha. Thanks for inviting me. Good afternoon to all the fellow panelists as well. I think I can sort of break it down into 3 parts, right? You look at the period prior 2008, right? So, you know, Holcim came in, bought Ambuja ACC. Back then, capacity was 160 million ton, demand was 140, and from 2005 to 8, yes, they saw, you know, EBITDA per ton sort of jumping from 400 to almost 1,000 rupees a ton, led by very strong capacity utilization. Then from 2008 to 2022 was phase 2, when, you know, the almost 20% of capacity sort of refused to grow.
Yes.
Overall capacity grew from 160 to almost 550 million tons, and your demand grew just from 140 to something like 350 million tons. So that 1,000 rupee EBITDA stayed 1,000 rupee.
Yeah.
Right? The entry of Adani now marks phase 3 in the cement sector, when everybody seems to be very keen on growing, right? Adani has said 70 to something like 210 million tons, Ultratech, yes, also 210. Sri, you know, Dalmia, all of them want to grow.
Yes.
So possibly now looking at everybody maintaining their capacity and volume market share,
yes,
which brings in some best practices to answer your question. You know, cement is sold something like 5 rupees a kilo. So yes, there is a limit to which you can ship your product out. And therefore, it's a very, very heavy sort of logistics, packing, fuel heavy business.
That's why it's a regional play.
Exactly. And now you will see with all these players trying to grow, There will be some M&A plays. We'll come to that as we go ahead in the show.
Yeah.
But makes for very interesting times. I am with you on that one.
So, Jigar, it's interesting time indeed, because let me say that, the market participants, analysts all across are having a field day in really doing the guesswork on what's up for sale and how will this consolidation really play out. Ultratech will also not want to leave its numero uno position. Adani will try to beat them in becoming the #1 player in the country. And JSW Group also has the bandwidth of growing with acquisitions we have seen in the other sectors. So, Mangesh, if we really put the spotlight on the deal dynamics, how are you seeing the industry trends changing? And what is the fight for? Because the demand has been lower. And, are we really looking at a thrust towards infrastructure, demand to be far higher? But what about the pricing power and margin play by these players?
Yeah, hi. So the consolidation within the cement industry has been talked about for very long, but we have seen a relatively lower amount of consolidation. So we have seen change of hands for sure, but definitely consolidation has been very far in between, and that has largely been driven by distress in the balance sheet. So if you look at most of the cement companies right now, the distress is far less, barring say very few names that you can come across. And that is definitely not going to fulfill the ambitions of the group that has entered. So either, we are looking at, if you look at most of the other players, I think there are very few willing sellers in the market, irrespective of the value that you offer to them. So I think whether it could be a hostile takeover game or it's something that is already being put up between the corporates that they would want to merge or consolidate these businesses, that is something that would definitely happen. Our view on the sector is basically if the Adani Group goes through inorganic route for this said expansion, at least up to 50% of their total capex plans, then it would not have a very severe impact on the demand-supply dynamics. If they are not able to garner that share through acquisition, then definitely the supply in the market could be relatively on the higher side. Right. That's the view we have. And in terms of deal dynamics, or if you look at the most of the targets that are there in the market, I think they would have a field day right now, because it is not only the Adani, I think probably even the other larger players would be willing to offer a relatively higher price than they would have had earlier. So I think really definitely interesting in terms of deal points.
So Mangesh, what is the reason for India cement to fall so much 3 days on the trot? It hasn't seen any speck of recovery, and it has fallen quite a lot from the time they announced the JSW deal to sell off the mining asset. What is your reading very quickly?
Yeah, so in my opinion, anyway, the stock had risen also substantially, and I think it was risen on the hopes of a whole company deal that could happen with an aggressor or probably a large player like Adani. But then this deal which has happened with JSW, it is only for one mining unit. So I think that confidence that the investor had that probably this would go through to Adani and they would pay a relatively high premium to them, I think that has fizzled out a bit. And overall, JSW have got a really good asset. They are setting up a 5 million ton plant on it, on the limestone mine. And this one, as an investor, I would have not liked any company to sell the limestone mine because it's a very precious reserve.
Yes, so therefore, geography, Mangesh, as well as the mining assets for the real backward integration to really make the right amount of margins, that's very critical for the buyers as well. Anil Singhvi, how do you read into this India Cement's move and the kind of stock reaction, and do you expect it to be a takeover candidate from here on now after this development?
Nisha, 2 points. One is that they are predominantly South player. So having this asset in MP, and they would have had to incur large capex, and they already have a lot of that. So I don't think they would have gone ahead and set up a cement plant. So I think it makes sense to really lighten the balance sheet, that if you don't have any intention in a foreseeable future, then you monetize it and move. Now, why stock market has gone up and why share prices have come down? Essentially, people have built hopes that, okay, India Cement looks, because Mr. Damani is there, so someday this transaction will take place. And when they see a small transaction of only 400 odd crores, I think it's an immediate reaction to that. Going forward, whether India Cement would really get out of this business and then be sold, I have my doubts. I've been seeing India Cement for the last 40 years. Enough times he has gone through all the problem, but I think Mr. Srinivasan is a great fighter. He has gone through a lot of times. I think he's been in the oldest in the cement industry today among all cement players. So I have very high regard for him to have withstood all the problems in the industry right from the Levy days to today. So he's passionate about cement. I think to very large extent people attach this that, okay, that what value are you trading, $60, $70? I don't think cement industry is really working on that kind of thing, a particular M&A. I've done enough M&A in my life on this. And secondly, I think Mangesh made a point that, weaker players get sold out. I mean, we sold out when Ambuja was the highest profit making to Holcim. And again, the same thing repeated when Holcim sold out to Adani. So if that will work, $60, $70, $210, it all depends upon how you really approach the subject. How do you really want to work around it? The point which Mangesh made was that whether Adanis will spend 50% of what they have today, about 25,000 odd crores, out of 20,000 crore infusion. According to me, they will be buying assets. They will not be building assets.
So out of all that you said, Anil Singhvi, there's one very important takeaway that some of these promoters are fighters, and the promoter fabric of the country plays a very important role in the M&A game as well. So you'll see a lot of those histrionics also play out. It won't be an easy consolidation also. So we'll actually slip into a short breather on the show, and we'll come back and discuss some of these aspects and also the pricing dynamics in the cement sector because of hectic deal activity. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are talking about the hectic M&A activity in the cement sector. Jigar is here with me in the studio. So, Jigar, you've really tracked the entire cement sector for a very long time. When we talk about consolidation by the big players, who could be up for sale now?
Yeah, Nisha, actually, cement sector is very unique in one way. If you talk to any cement company, they'll happily say that we can build brownfield capacity at $70 a ton. M&A happens anywhere between $140 and $170 a ton. And if you look at the listed cement plays, they are down 25% from their 52-week highs. And Ultratech, Shri Cement, Ambuja are still trading about $200 a ton. Most industries, you will have an acquisition premium. Here, there is an acquisition discount, which is very surprising in and of itself.
Yeah.
Now, look at the arithmetic. If you buy an asset at $175 a ton, right? Even if you fund it 50% with debt and you want to make a 15% ROE, the EBITDA per ton needs to go up to 2,500 rupees a ton.
Yes.
Right? Currently, it is 1,000 for last year. Arguably, it will be closer to 800 rupees this year, right? Or even lower. So if a company is acquiring a new asset and everybody is growing, demand is growing only at a certain click, then how would it incrementally make sense to buy at $175 a ton? And if secondary shareholders keep paying $200 a ton, thereby company, happily invest at $70 and get valued at $200, then why would they stop adding capacity? Right. And if a capacity is not going to get stopped, then how would the demand supply come into equilibrium, right?
Right.
Surprisingly, the acquisition also here plays a part. So I'm with Anil sir when he said that strong players have sold out as well.
Yes.
But Holcim bought it at $200, $207, sold it at $170, $180.
Yes. And
essentially, they could have been better off putting money in the US Treasury market, right? Might not have had to invest in India per se.
Yes.
At $175, if it's not going to make money, then consolidation itself is going to be a very large problem, I think.
Right.
So smaller players, if they're getting $175, the ROC of the listed players is not at a level where you are generating returns which are higher than your cost of capital.
Right.
So I would say they're better off selling assets rather than continuing to build for the smaller players per se.
All right, very important point made there. Let me throw that question to Mangesh as well. Mangesh, as per your analysis, the deal valuations that we have seen in the recent past, the pricing mechanism. It's a more of a regional play. Do you think that this disruption is going to have an impact on the pricing power as well? Because a new player may want to be more aggressive in capturing the market share first and then look at the margins, but after making quite expensive acquisitions as well. How do you see this particular aspect, which will have a huge bearing on the market dynamics as well as the equity share return for the shareholders in the market?
Yeah. So I think in order to succeed in a commodity, you need to have scale. That is one. And secondly, you need to be cost efficient. And I think Adani is striving to do both. They have already announced the scale ambitions. And on the cost, they strive to be one of the lowest cost producer. They've not detailed it out how they want to do it. But if they are able to succeed in that aspect, obviously the industry would follow them later on. But then that would be the decider where the pricing will go. So I don't think that just because of this, second thing that I believe for Adani is that I think they will go for acquisitions first up, and then they would look at brownfield, because then at least the CCI angle will not come into play. They can reach up to 25-30% in a capacity in a region, and then you start growing organically. I think that would be the play for Adani. And that's why at least initially, I think the pricing should be kept in a good state, because largely the expansion should be driven through acquisitions, which will not lead to increased supply in the market. So I do believe, and eventually, if there is a situation that we have a very large two players in the system, then obviously pricing should remain healthy over a longer term.
All right, pricing to remain healthy, you are saying, despite a disruptor with aggressive stance also coming in. Anil Singhvi, how do you see this particular aspect? And I want to also throw light on one aspect that, you know, the past M&As have happened because of various different points. There was a divestiture in a big M&A because of which Lafarge deal had happened. They had to divest, they had to sell off that particular unit as part of the antitrust, requirements. And on the other hand, Holcim was giving up on India assets also to reduce their carbon emission globally and also to get some cash out of the business. Now, how do you see, some of those reasons really trickling in the future trajectory of M&A going forward?
Nisha, I think it's a very important point which you raised, and I always believe that except the entry of Holcim, which was to a very large extent was initiated by us, there are no foreign players. So first of all, you must make it very clear there is a regional and an Indian play. So regional play more importantly because India is a very large country, and as Jigar mentioned, cement prices are just about 5-6 rupees a kilo. So it has to be a regional play for all the time to come in. Now, how does the M&A really work out? I don't think M&A works out on the basis of what we are describing here, $60, $70, $80, $120. It doesn't work like that. To my mind, it is of no use. The issue is very simple, that today if I want to expand my footprints, and this is what at least for 25 years I did in Ambuja, if I want to really have my footprints in the geographical reach, which I really need to have it, then dollars per ton and all that is all humble. I need to have it how my market share in that particular market will be. And if you don't buy a cement plant for 1 or 2 or 3 years, it's a 50-year, 100-year-old assets are still working on that. So I think it's a very big strategy which will become in play. As far as CCI is concerned, I think even in Lafarge's case, because they were foreigners and all that, they couldn't fight this whole matter. But I don't think it was the right decision even by CCI to have asked them to sell off Lafarge's assets. And going forward, I don't think it's going to be. Which was the last time you heard an Indian company really finding it difficult with CCI?
But to really intervene over there, Anil Singhvi, CCI was one of the big concerns because of which Ultratech couldn't go full blow on the Holcim transaction as well, because they could really understand that CCI clearance will be difficult in this case.
I give you there because ultimately Ultratech today is about 130 million tons, and this would have been 65, which would have made them almost close to 40% of the India's market. That would not have been possible. But 10 million tons, like what Lafarge sold out on that, I don't think in the scheme of things today will have a problem for Mr. Adani or for Ultratech. It could be a problem if suppose tomorrow you want a smaller player having 20 million ton capacity and want to acquire a 10 million tons. In that particular geographical area, again, as I mentioned to you, you must must be looking at India as a regional, and every region has a cement plays out on that.
Yes.
So basis that, I think going forward, Ambuja and ACC both will be working on looking at expanding their footprint by M&A.
That is done.
Ambuja, in fact,
That is actually well understood, Anil Singhvi. So I'll ask you one final question and expect a quick answer from you. We are running out of time here. So you said that, you know, valuations don't matter, whether it makes sense numerically in the short term. It doesn't matter. It's about becoming a full pan-India player. Some regions are going to be important. So my one question to you, is cement turning out to be the big boys play in the country going forward?
definitely, I think it was given on platter to UltraTech by Holcim for last 10 years, and that rule of game has changed completely. Holcim was a passive player. Mr. Adani is proactive player, not only aggressive, very proactive. You'll see huge amount of M&A activity in next 12 months. Take my words.
All right. So that sounds good for the deal straight. Thank you so much, Anil Singhvi, as well as Mangesh, Jigar, for joining us on this quite an interesting discussion on the M&A activity in the cement sector. And we'll keep tracking that very, very closely right here on Big Deal. Thank you so much for joining us on the show.